What does a $240 million investment in commercial real estate mean for a city like Addison, Texas? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a significant move for the town of Addison, a new mixed-use development called Addison Junction has been approved by the Addison City Council. This project, spearheaded by Quadrant Investment Properties, is set to complement the upcoming DART Silver Line station in Addison Circle. With a budget of $240 million, Addison Junction will feature a 155,550 square foot mass timber office space, a 140-room boutique hotel, an aviation-inspired event venue, beer garden, rooftop patios, and restaurant space. The development, covering a 14-acre area, marks a shift from earlier plans that included residential spaces, focusing instead on commercial and entertainment venues. This change reflects market dynamics and positions Addison Junction as a hub for new jobs and economic activity, with expectations of over 1,600 jobs and $300 million in annual economic output. The town of Addison has committed $40 million to the project, funding 2 public parking garages and infrastructure. Addison's strategic planning has been in the works for decades, with land acquisition around the rail corridor dating back to the 1980s. The anticipation of a light rail expansion has been a long-term vision for the town, and the DART Silver Line is the realization of that vision. The 26-mile commuter rail line will connect Plano and Dallas-Fort Worth International Airport, enhancing accessibility and connectivity. Addison Mayor Bruce Arfston highlighted the town's history of creating connected, walkable communities, noting that Addison Junction elevates this vision. As the town continues to develop, projects like Addison Junction are pivotal in shaping its future as a vibrant and economically robust community. Let's delve into the tech talent surge in Dallas and its implications for the office market. Despite a national slowdown in tech hiring, Dallas has defied the trend. According to a new report by CBRE, between 2021 and 2024, the Dallas-Fort Worth market posted the fastest tech talent growth of any large market in the United States and Canada. This study also ranks North America's tech talent markets by their appeal to both employers and workers, with Dallas landing at number 8 overall this year, up 1 spot from 2023. The dynamics in the tech sector are shifting. There has been a 50% jump in AI-skilled workers, while tech manufacturing jobs have declined. Despite the slowdown in high-tech sectors, AI-related job growth is happening at the highest rate and quantity. The report highlights that 20% of available tech jobs in the United States are now AI-related. In Dallas-Fort Worth, there are about 20,000 AI engineers, which is on par with Boston and Los Angeles. While tech accounts for the largest share of AI talent in the United States, professional and business services, as well as financial services, are also drawing from a strong pool of AI-skilled workers. Dallas-Fort Worth stands out due to its high concentration in these sectors. However, the tech industry still faces challenges in diversity, with Hispanic, Black, and female employees being underrepresented. The CBRE report cites Dallas-Fort Worth as a standout market, being one of only 4 metros last year to produce more tech jobs than tech degree graduates. The region's tech talent workforce reached 227,220 in 2024, marking a 26% increase since 2021, second only to New York in total jobs added during that span. In terms of education, Dallas-Fort Worth ranked among the top 10 markets for tech degree completions in 2023 with 9,065 graduates. On the real estate front, historically, tech companies chose office locations based on the size of the local workforce. Today, the focus has shifted to attracting people with specialized skills, often at higher salaries. In Dallas, the average annual tech wage is $124,600. While universities are producing more graduates, many do not stay in the markets where they earn their degrees, opting for regions with better job prospects or higher pay. Since the pandemic, high-tech firms have emerged as a top driver of United States office leasing, accounting for 17% of activity in the past 6 months, up from 10% in 2022. Most companies are embracing hybrid schedules, but AI-focused firms are more likely to require employees on-site full-time. Despite the growth of remote and hybrid work, companies continue to value tech clustering and often prioritize specific submarkets convenient to tech talent. Dallas-Fort Worth is among the few United States markets to post more than 20% office rent growth compared with pre-pandemic levels. This significant growth reflects the region's dynamic development, deep talent pipeline, and increasing prominence in AI innovation. The influx of young, educated professionals and a thriving tech ecosystem continues to attract top-tier companies and talent, reinforcing Dallas-Fort Worth's position as a leading tech hub in North America. In a recent transaction, Epsicap REIM, a France-based independent real estate investment management company, has successfully made its second acquisition in the United Kingdom, marking its first venture into England. This acquisition was executed on behalf of its property investment fund, Epsicap Nano. Epsicap REIM has acquired 2 retail units in Leeds, extending to 32,630 square feet, for a total of £4.4 million. These units are currently let to B&M and Farm Foods, and the retail park also includes a LIDL supermarket located on Armley Road. Florian Lecuré, partner and head of investments at Epsicap REIM, expressed that, following acquisitions in Portugal and Scotland last July, this latest investment in the United Kingdom underscores their ability to implement their investment strategy across Europe. Lecuré stated, "This asset perfectly fits our investment strategy. A strategically located retail park let to strong covenants with secured long-term cash flows." He also hinted at more deals closing in the United Kingdom in the upcoming weeks and months. Trammell Crow Company has successfully completed the Blue Ridge Commerce Center, a significant industrial development in Fort Bend County, Texas. This project encompasses 1.35 million square feet, marking a substantial addition to the region's industrial real estate landscape. Located at the intersection of Fort Bend Parkway and FM 2234, the Blue Ridge Commerce Center is strategically positioned to attract industrial companies seeking expansive and modern facilities. The development's completion is expected to draw considerable interest, bolstering the area's industrial appeal. This project reflects a growing trend in industrial real estate, where large-scale developments are becoming increasingly attractive to companies needing significant space for operations. The Blue Ridge Commerce Center's size and location make it a prime candidate for businesses looking to expand their footprint in the Houston metropolitan area. The success of the Blue Ridge Commerce Center is indicative of the broader industrial real estate market's strength, particularly in regions like Fort Bend County that offer strategic advantages in terms of logistics and accessibility. With a robust infrastructure and proximity to major transportation routes, the area is well positioned to support continued industrial growth. As industrial developments continue to rise in the United States, regions like Kitchener-Waterloo, Cambridge, and London, Ontario, can look to projects like the Blue Ridge Commerce Center for insights into supporting their own industrial expansions. These Canadian markets, with their burgeoning tech sectors and strategic locations, have the potential to attract similar large-scale industrial investments, fostering cross-border commercial real estate opportunities. In a strategic move to bolster its multifamily investment platform, Colliers has acquired the Dallas-based Greystone Sales Group, also known as GREA Dallas. This acquisition expands Colliers' capabilities with a 25-person investment sales team that advises both private and institutional investors nationwide. David Josker, president of Colliers West Region, emphasized that the acquisition aligns with the firm's strategy to enhance its multifamily presence in the Dallas-Fort Worth area and throughout Texas. Josker stated, "Colliers remains committed to delivering best-in-class multifamily services while broadening our reach in Dallas-Fort Worth and across the Texas region. We are committed to recruiting and retaining the best talent in the market to deliver enhanced value for our clients." This move underscores Colliers' focus on strengthening its position in one of the country's most dynamic multifamily markets. Dallas-Fort Worth continues to rank among the top 5 markets nationwide for multifamily investment sales, according to Colliers. The region's robust fundamentals, strong investor interest, and a healthy development pipeline keep it at the forefront of multifamily market activity. Despite a slowdown in new construction, with a decline for 11 consecutive quarters, the area absorbed 15,682 units in the second quarter of 2025, up from 10,719 in the first quarter. Currently, There are 46,773 units under construction in Dallas-Fort Worth, with an additional 17,693 units expected to be completed within the next year. This slowdown in new construction, coupled with strong job growth and ongoing population increases, has driven occupancy rates to 94.2% across all property types. These trends highlight the region's continued appeal and the strategic importance of Colliers' latest acquisition. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.